What are you expecting from the Fed later today? What do you think they actually should do?
Well, what I think should happen is not necessarily the same as what I think will happen at 2 p.m. I think the Fed should just hit the pause button and see how things wash out in a couple of months. But I think they will actually raise by 25 basis points and just restate their commitment to fighting inflation above all else, because their mandate is really to tighten until enough things break and inflation falls in line. And frankly, not enough things have broken yet just because a few banks have faltered a little bit. And so that said, the reason I say we should see a pause is because a 25 basis points hike isn't going to cure inflation on its own right this moment. So I don't see what's wrong with, just hitting the pause button and waiting until May. Hopefully by then we'll have much more clarity on how stable the banking system is or isn't. And we'll also have more clarity on whether there's additional fallout or contagion affecting any other sectors, such as maybe real estate or autos, for example.
All right, you're emphasizing clarity right now, but any concerns that a pause would send a mixed message to the markets and actually confuse people about where the country is right now and where we are when it comes to this whole banking crisis?
Well, frankly, I think this whole banking crisis has a bunch of mixed signals everywhere, right? On one hand, our deposits are safe and secure and fully insured. And then on the other hand, we're insured up to $250,000. And so, the Fed has found ways to use the mechanisms at its disposal to give us the confidence in the banking sector by backstopping deposits without coming out and fully saying your deposits are 100% FDIC insured. And I think more to your point, there's so many things that could be seen as a sign of one thing versus the other, that there's just a lot of you could parse any idea out of any of the moves the Fed makes. The one thing I will say, though, that I expect at 2 o'clock is the Fed to just keep using the words data dependent, data dependent, data dependent. If we do get that pause, they won't use the word pause outright. They'll just say, we're going to come back and revisit this in May, and we're going to remain data dependent.
So you see data dependent replacing transitory in 2023. Interesting take there. So before we let you go, I want to talk about what seem to be the two hot topics when it comes to the markets: investing in the banks and also big tech. Where do you stand on both?
Yep. Yeah, so I don't think it's time to go investing in bank stocks just yet. I think there will definitely be some better opportunities down the line, simply because we just don't know how much concentration risk there it still is at certain banks. We also just don't know how many other banks hold paper of their fellow banks that are what we would call a zombie company, right, any other time. So I don't think that it's necessarily the time to go dumpster diving and buying banks. Just because they're down 50% doesn't mean they're necessarily a bargain. I do also think that the rotation into tech is kind of obvious if you just consider that companies like a Microsoft or Apple don't necessarily need to borrow for their operations to continue, nor do they need to borrow to grow right now. They have enough cash on their balance sheet that they can fund their operations for years to come. And so I do think it makes perfect sense that this rotation into tech has happened. And I think it's the only positive S&P sector right now.